All right.
Now reporting season.
Yeah, let's get into it. It's earnings season or reporting season, depending on what side of the globe you are listening to this. But we've come out of America, mixed bag over there, I would say, and so everyone was interested to see how Australian companies were doing, what we could learn about the Australian economy, what we could learn about the Australian consumer, and I guess it's going to give us our best indication of all of those questions around. Where to for inflation? Like, is it still in the supply chain or is it in now labour and services? Where to for, the economy in a recession and, how's Australia's property market and Australians going with mortgages? Like, there's a lot of questions that we're wondering, and this is the time that we start to get some answers.
Yes.
So, where do we want to start?
Well, let's start with one of Australia's largest companies, CBA.
Yes.
Shall we?
Yeah.
Get that out of the road.
That helps answer some of these questions.
Yes. Yeah. So CBA reported a $9.8 billion profit for the full year, which was down 6% from last year. Now, I guess the news coming out of it was around their mortgage arrears, which was up from 0.92% to 1.3%. Doesn't sound like a lot.
Yeah.
But when you contextualize that with the value of their mortgage book, it's a fair chunk of change.
Well, yeah, and the amount, that's a lot of Australians now falling behind on their mortgages.
Yeah.
I think it's important to stress that that's kind of 1.3% isn't majorly over the historical average.
It's not worrying in a sense.
Yeah. Except for all those people that are now struggling with their mortgages.
Yeah. You know what I mean.
Yeah. It's not a sign of things being massively out of whack.
Yeah. I heard Marcus Padley talk about CBA yesterday, and he said that profit is $9.8 billion. It's $367 of profit for every single person in Australia. Wow. That's how he, I guess, tried to help everyone understand the enormity of it.
Yeah.
And believes that it's one of Australia's best income stocks going around. You can't beat it.
Yeah. Okay.
Yeah.
Interesting.
Yeah.
Well, look, no one gets excited about CBA, so
No.
let's move on. I think this week in reporting season has reminded me of two golden rules when it comes to reporting season. So the first rule is it's all about expectations in reporting season. And we saw the good and the bad of this this week. So I don't know if this is the good or the bad, but JB Hi-Fi was one big example of that.
Yeah.
So JB Hi-Fi saw its shares jump 8% after announcing.
Yeah.
What do you think happened?
They beat expectation, but they reported lower profit and sales.
Yep.
Yeah.
Sales were lower and profit was lower, but
Yeah.
shares jumped 8%. I think they're up now more than that, double digits.
Yeah.
And that was because expectations were even lower than that. So their business didn't do as well as last year, but their shares went up.
Yeah.
So that's one example of expectations. Here's another example. CSL, the healthcare company, they reported and shares fell 4%. Oof.
Ow.
Something didn't go well,
No.
maybe? No, how's this? 25% profit growth.
Whoa.
And they forecast double-digit percentage profit growth for each of the next 5 years.
Wow.
Yeah.
That's impressive. So that's what they delivered and forecast. Yet stock fell
4%.
4% because markets wanted more.
Yeah.
So
So
tough being a public market, a public company, honestly.
Well, it's just like when you see, you watch Alan Kohler on ABC News at night, and he will talk about how shares went up and down.
Yeah.
But that isn't an indication of how the business went. That's an indication of what the expectations were already built into the price. So you just that's what you got to remember. Number one golden rule when it comes to reporting season: expectation. Speaking of a company beating expectations, let's talk about Temple Webster because they.
The AI company.
Yeah. So for context, Temple Webster is an online furniture retailer. When ChatGPT first was making waves, they tried to ride that wave and call themselves an AI company because as far as we can tell, they rewrote all their descriptions of furniture with ChatGPT.
Yes, that was it.
Yeah.
Tried to use it for better marketing copy.
But here's the thing, Bryce.
Maybe it's
that
worked.
marketing copy may have worked. So profit was more than 20% above what analysts were expecting. And so the share price was up 23% in a day.
Wow.
Yeah.
Wow. Is that going to sustain it? Who knows? But that's another indication of what it means to beat expectations. I had a look at it though. It's a very expensive stock.
So for Temple Webster, we should actually speak about the results because they were interesting. So revenue was up 26%. Love to see that.
Yeah.
Profit was down 79%. Now keep in mind that was still 20% above what analysts were expecting.
Yeah.
Now this is a story of expectations management. So like as a public CEO, one of your key jobs is to engage with your shareholders and investors and make sure they know what's coming. No surprises. That's good public market management. And so even though their profit fell almost 80%, like they had made the market aware that the market knew they were investing for growth. So their profit was going to be down. And then they beat the expectations that they had lowered in the minds of their investors.
Yeah, but don't think that means you can go out to the market and just say something ridiculous knowing that you're going to beat it.
Yeah.
You have to update them accurately.
If you start saying things ridiculous, then you go back to where we started this episode,
ASIC
getting sued by ASIC. Yeah. So that's, I said there were 2 golden rules. The first golden rule is expectations. And I think as long-term investors, what we should be doing is looking beyond the share price movement and how the companies are going.
Yeah.
So that's 1. Rule number 2, companies that have good news like to go early. Companies that have bad news like to go late.
So what you're saying is we've seen all the good ones.
Not all the good ones, but like it's been a really good week.
It has been. Yeah.
Like you can list the companies that I think had good news to report. Some that we haven't mentioned here that we should. Pro Medicus.
Yep.
Just shot the lights out.
AGL.
AGL, yeah. Who would have thought?
Profit of, I think, what was it, 720 thereabouts after a loss of 1.2 billion or something last year.
Okay. Cochlear raised their dividend like 24% or something.
Yeah.
Telstra even raised their dividend.
Yeah.
Like a lot of these companies had good news or like there were aspects of the report that were good for investors, which led to, I guess, a little bit of a buoyant mood. Even Seven Group, like not Seven West, let's talk about them in a sec, but Seven Group, which owns, Boral and a bunch of different companies, not just the TV network. They had a good report.
So there's either 2 things that play out from here. The trend continues, or as the weeks go by, generally we've got about 2 weeks to go or thereabouts, we're going to start seeing some of the companies that want to bury it at the back end. Yeah.
Like we haven't seen a lot of consumer-facing retail.
Yeah.
A lot of non-discretionary retail, except for JB Hi-Fi.
Yeah.
But like
it'll come.
But I think let's close it out by talking about one company that did disappoint, Seven West Media.
Yep.
So that is the owner of Channel 7. We said earlier in the episode, they reported that the total market for TV advertising was down 8% year on year. Seven West's profit down 69% year on year.
Oofed.
Yeah.
Wow.
I don't know who would want to be in linear TV.
Yeah, well.
Except for sports bet.
Yeah, well, it's fascinating. That hurts. They're in trouble. And I think it was a number of episodes ago, we were just speaking about more broadly what's going on with Channel 10, 9 and 7. And who knows what the future holds for these channels in 5 or 6 years. Like
my gut, and this is a sort of, like there are people that know more about this world than I do, but my gut is that pure play media is going to really struggle because if you look at the media that's succeeding, it's subsidized. It's like cross-subsidized by something. So like, Amazon can afford Amazon Prime. Apple is pushing more into media. Netflix is pure play, but slightly different obviously, different cost structures. And actually their users pay, whereas like a lot of linear TV, their users don't pay. But if you look at like perhaps the Stokes family, Kerry and his son Ryan, will be willing to wear losses on Seven West for longer because there's like a prestige that comes from owning a big media asset. And so maybe, like if you were investing in Seven, you'd be looking at Seven Group, not Seven West.
Yes.
But then you look at 9, And it's like, it's got its newspaper division, it's got its radio stations, it's got its TV. It needs like something, it needs a cash cow.
Yeah.
It needs its Boral, or it's, just something that can just print reliable income.
The Packers back.
Oh yeah, it would be so challenging.
Yeah.
Like I don't envy their jobs at all. Like,
No.
You just look at a cost structure that was optimized for 20 years ago.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.